Welcome. I'm still waiting for people to join, but this is for those of you that are watching on YouTube right now. This is the live video for the Gamma Optimizer, June 30, last day of the quarter, second quarter of the year. So hopefully it will be a quick one. I don't think that I will take that long. So for those of you that are just joining, just type on the chat window if you can hear me. I imagine you can, but please, just to confirm that the sound is good. Okay, I'll assume that you can hear me well. So let's start with the positions. Now that we have a nice position tool, let's go over it, and then we can work our way through this. So let's start with GDX. My God, I am really I don't know what to do with GDX. I took a bullet for you guys. I used to have 2 butterflies. Now I have only 1. So I closed the butterfly for July, and I bet that's the one that is going to pay more money. So some of you are still bullish, and I guess some people already received the signal to go long on this one, thanks to Dr. Luke. So that will be cool if we actually can get an upside move in GDX Sunday. So I have the September fly just in case. You never know if the wave 3 will start. Also, to be honest, if you read the update, I didn't really close the July fly. I have it there. It's just that I can, for my accounting purposes, I just took the loss just in case. I don't want to carry it. If it pays, I'll pocket the money, but I won't be able to brag about it here in the live video. That's the only difference. And if it doesn't anyway, the loss is already taken. So GDX, we'll see. Now SPX, we have all sorts of things going for SPX for this week. We basically had a Lotto strangle because I was positioned with a vertical put spread and with a vertical call spread, both of them. And during different points of the week, the strangle actually paid outrageous amount of money. So early in the week, the call spread was paying really good money. And yesterday, the vertical put spread was actually paying excellent money too. It was up probably to $2 to something yesterday. I didn't monetize any of those during the week because they were lottos and they were meant for something else. They were basically, in particular, the put spread was meant as insurance for the risk reversal. So insurance is one of those things you don't profit from insurance. You have it there just in case there's something terrible happens, and the vertical put spread was just right there in case the end of Western civilization happened today. It didn't, so I didn't monetize it. I kept it around. It was very cheap. And the vertical call spread also was the same. It was a lotto, and I was willing to lose $50 on it. And as you can see, 0. It's very likely. And the vertical put spread is 0. So very likely that we won't see any action on the close. Amazingly, the risk reversal is green today. Not sure why. Let me see what's going on with XPX. So XPX is up nicely from yesterday. I don't know if you guys have seen this tool before. I bet that many of you have seen it. This is what I call the Volatility Center, but that's not really the name. It's called more like the Momentum Center. And you can see that momentum has been green the last hour, and it's also green there for a minute. And volatility today has only been 5.23%. There's no volatility to speak of, and you can see it here in the little dots. The dots were all spread this morning, and then as the afternoon progressed, kind of volatility died down, and kurtosis is really low. In terms of trends for SPX, the trend, I am kind of using this now to talk about it. So the trend continues to be negative. Come on, this has been negative momentum for the longest time that I remember. We haven't enjoyed any single positive momentum, briefly around this area, but then that was it. The good thing is the CN dot for today is up, so probably if next week being that it's a holiday week and it's very patriotic and people are feeling very American, I bet the market will go up a little bit. So let's go back to the position. Sorry about that little detour. So let's talk about the risk reversal. The risk reversal is my main position. I have gigantic size on this risk reversal. I must confess that I'm heavily positioned on this. Even though it was not full size, my partial size of this risk reversal is a lot of money running here. But I feel very confident about it. Right now, it's only barely green. It's only 4 cents up. But remember that the risk reversal will allow you to pocket the credit, these 72 cents, if XPX ends between 2,400 and 2,495. That's a tremendous... 2,485. I forgot what is the range. Let me see what is the range of this. 2,485. So as long as XPX is between 2,400 and 2,485, this risk reversal will pay the credit. Now, if for some miracle, something that we don't know, XPX actually goes beyond 2,490, then we get to make lots of money on it. But that's how times change. Now, this was back in June 12th, 18 days ago. The world was perfect, and we actually thought we could see the moon on XPX, and that's why we position about this. And that was also the reason why I developed the risk reversal, because you could be really positive, but I mean, I didn't see XPX going that high, but it was a range to cover. We are kind of on the low end of the range at 2,430, 30 points only. So this risk reversal is something that I had been hedging a little bit. So I have spent some money on the hedging of it. For instance, I spent like $70 for the hedging for this week. I might hedge it next week too. I have lots of money to hedge it. I mean, we got a huge credit, so we can hedge this nicely. And okay, so the strangle lotos are nothing to be done here. As usual, if you are doing these lotto plays for profit, for actually playing, don't let them disappear. I mean, if you see this higher than 100% return, take it. Be happy with 100%. In my case, it's just the vertical, as I mentioned, was insurance, but it was returning way more than 100% yesterday. And the call, at some point it returned like 80 or 90%, but it was a lotto. I only spent $50, so the 90% of $50 is $40. I mean, I was willing to be greedy with that one. But if you are playing size on this, if you're actually playing 500 or 5,000 on this kind of plays, then you better take profits. You better monetize profits when you see them. Finally, this week we opened the short gamma trade, what we call the short gamma trade. The short gamma trade is basically a calendar spread, and this is the calendar spread right here. It's the thesis for that, look how lucky we are. The thesis for this is that the market was going to be really quiet and calm because the holiday week. And sure enough, as soon as we open these, we get almost 2% down the next day at some point. So of course, timing was terrible. However, the trade is actually doing well. I like this trade. The trade is cost 280 and it's 255. This trade is fantastic. This trade is right there where it's going to pay nice money. I don't know if it's worth protecting it. I don't know. I'm willing to sacrifice probably $300 on this one or $400. It's a trade that might work, in particular next week. And then the next week is going to be really quiet. So I am willing to give it some room. In fact, yesterday I gave this trade a lot of room. This trade, I saw this at around $2 or even less than $2 yesterday. So I was having a drawdown of almost $1 on it, but I didn't care because it was clear that the market was coming back, and also I have other positions helping me. So that was XPX. And XPX, as I say, I don't know what is going to happen next week. If you have seen the emails, we had an early signal this morning around 10 in the morning. Finally, the deep learning algorithm generated a nice, strong signal. But I guess the market moved a lot from from this morning, and as someone on the room mentioned, it has moved already half of the way, so the signal kind of disappeared. It's not there anymore. I used to have it here. I don't have it anymore. Anyway, I had the signal, but I don't have it anymore. But we'll see. We'll see. My expectations for next week in XPX are basically very flat, very quiet, and also I tend to agree with Xenia. Xenia, I think she's spot on. She's looking for a little bit more upside for next week, and the market has been really resilient. Today, you can tell that they really try to drop it, but right now it is above 2,425, which is my hedging wall level. So I think the market is positive. This could have turned to be a terrible day for the market, but it wasn't. So probably this coupled with the fact that Monday we have a half session and off on Tuesday is going to be interesting. So what else do we have here? We have XLE. XLE, we were early. The first two trades were kind of early. It was 1 week ago probably, or a little earlier. So XLE is almost breaking even on both. Not much to do. I designed a new one that I like it better. It was suggested in the room. It was a wider vertical spread, and this one is fantastic. I'm glad that I was requested to redesign it. Oh, you can see that we are break even in one. So this one is already making 12 cents, which is really good. It's almost 40% return on entry. So XLE, I'm happy with XLE. Did I mention that I really hate GDX? Okay, I think I mentioned that already. But XLE is doing well. Let's check here XLE, what is going on with it. Oh, look at the market is being sold the last few minutes as usual. So XLE, so decent volatility, looks nice today. And also the long-term trend looks very nice too. You notice that we are in a positive trend, and in fact this whole week, the last 3 sessions have been really good for XLE. So I think our bullish thesis is fine. I think these positions will pay nicely at some point. Not shown anymore here are our big trades. That was the highlight of everything, the VIX. The trades that we did on VIX were fantastic. I opened 2 end of the world trades. I hope you follow on both. If you didn't follow on the second one, I hope you managed to get out with some money on the first one. I cannot believe that the first one, the first end of the world trade actually was green yesterday. Can you believe that? If you remember the strikes were so huge, were like 16 and 18. It was really far from where we saw VIX futures yesterday, and yet that trade was making money. The second VIX trade was even better. It was a trade that was 12 cents, and it touched more than 30 cents yesterday. I managed to liquidate that trade around 25, 26 average. So for me, it was a fantastic trade, and I was on size on this one. I mean, I went with everything on that one. We got lucky that our systematic trade made some money. I think I'm glad that I made some money right there on the first month we tried. But sorry about that. I think that there is potential for this systematic trade to profit all year long. I mean, the last 6 months of the year. And for that, let me switch briefly to Thinkorswim. I'm going to show you something here in Thinkorswim. If you look at XPX, notice how the recent realized volatility for XPX has been rising consistently. I mean, at some point, it was as low as 2.5%, and right now it's almost 12%. And it can be seen graphically too. You can be seeing that we have kind of a flat area, and then the market is moving more. And this is an interesting sign. When the market is coming from a period of very low realized volatility and it starts having big realized volatility, like it's having this week in particular, is having a lot of realized volatility. When that happens, it's a sign that we are in for more realized volatility in the future. So next week can be an exception given that it's a short week, but we don't know. Anything can happen, so I don't want to predict, give an all clear. But I'm telling you, folks, there is a very high probability we are going to see a very move second half of the year, and something surprising for me, it seems to be that the summer is going to be really active, and this is not something that is not normal. Usually summers are really inactive. Usually summers are you can just basically turn off your computer and come back in September. But the thing I am seeing on the market, in particular this particular action from the 26 and up, this is a sign of things to come. So I'm keeping an eye on those things, and we can design trades for it. Let's see if our calendar, we can at least milk our calendar trade that is designed to profit from calm, but I don't expect calm to be present a lot. And finally, let's look at the VXX trade. This trade, it was a revenge trade. I don't know if you remember back in May, we got a similar volatility event, and I was so sick I was not able to short it. Well, yesterday I was on the top of the game. I was determined not to let this happen again. So, and even though I was determined, I could not enter at the best price. We started shorting VXX with this vertical put spread that it cost me 31 cents, but it was 22 cents when I saw it. So by the time I paused in the room and then came back on my interactive broker scene and then put the order in, it went up all that. But I know some of you were able to get this really cheap, probably 25 cents. So for those of you that got this around 25, you can see you are enjoying a nice 100% return. If you are enjoying 100% return on this trade or more, take it. I mean, don't be greedy. It is a very nice return. I am being greedy because I only spent 31 cents, and also because I am not 100% up yet. There is a strong chance that VXX will be hammered after the close as usual. No, they usually. Okay, I have a question. Cool, finally. Do you plan to open a new long volatility trade? Of course. Long volatility, I plan to have a systematic volatility trade. What does it mean? That we are going to, every month, we are going to be ready with one. Exactly what happened this month. We were ready not only with one, but with two trades. We were ready for this month, for June. So I was planning on rolling, but there was no point on rolling right now because volatility is still a little bit high. So I am waiting for volatility probably next week when it's a vacation week. Implied volatility should come down a lot. And by a lot, I mean a lot. If nothing happens next week, if the things are really calm, it could be a good time to start a new one. Although, I don't know, it's too soon. The volatility even happened just yesterday. But we could. Something small. And then when the VIX contracts expire on July 19, that's the moment where I plan to enter a new one. So from here to July 19, we are going to enter probably small size. And then after July 19, we can enter in a more decent size, or probably enter in two shots. Enter one next week, and then by expiration we can enter for August. So that's what I plan to do with volatility. It's always good to have something cheap right there on the pocket just in case. And also, if my gut feeling about volatility finally returning to the market comes true, then it's better to have it. So okay, so VXX is doing well. Let's see what it's doing today. I love using this volatility center. I wrote it for you guys, but it's actually kind of useful. Yeah, so VXX, as usual in the mornings, tends to be really active, and then nothing is happening here in the afternoon. Interesting that the trend is up. The trend was up, but I guess for the last 2 days, this should start turning down soon. And also, the VXX experts, Mike is the expert on this. Mike is seeing more downside, at least before the big upside. So we could milk the VXX position a little more, but I mean, just do nice profit management here. Manage your profits as usual. Look at that. This is actually making me happy to see these things on green. Okay, so that was it for positions. If you have any questions on positions, please let me know. Let me check what I have here on my tool. Let's gather some real-time information in the meantime. So the things I like to see around this time of the day before the week ends is to see where we are in terms of volatility. Some options will expire soon. So let's see how is the gamma imbalance looks like. Of course, with the options that expire in a little bit, it's going to be interesting. So let's ignore those ones. Let's just use the ones for next week and up. So I think it's going to compute it, and we'll see how it looks like. So this is the gamma imbalance that we're going to have after the expiration today. So as you can see, we are a little above our main hedging wall, which is 2,425. This has been a really huge hedging wall. And if you remember yesterday, we almost tagged this area, the 2,400. So this is what gives me a little confidence on the positions that we have right now, because these ranges tend to hold, to strongly hold. So right now we are here. This is because of the open interest in this area is so massive. I'm telling you, it's going to keep the market, is going to try to keep the market around here as long as you can. Unless you have lots of organic movement, you need lots of buyers and sellers to overcome the hedging activity from option dealers. And again, curiously, there is nothing much on the upside. Clearly, people are not that optimistic about further upside in XPX. So that's something interesting. Usually, if you recall previous plots, previous charts, usually you can see higher walls on towards the upside, but here not. Here in this case, there seems to be the open interest in this area is very low, while the open interest here in the middle is really high. So we'll see what happens with the market. You also saw me yesterday talking about this very important point, which is the point where the market switches from long gamma to short gamma. Some of you might not be familiar with that, but if you're not familiar with that, it's a very simple thing. Option dealers are always hedging their options, always hedging. Sometimes, depending on XPX, there is a phenomenon where most market participants tend to sell calls. Why? Because they have a portfolio and they sell the calls as a income generation, or there's lots of hedge funds. So calls in XPX tend to be sold. This is very curious, but that's how it is. So option dealers are the ones buying them. So option dealers tend to be long those calls. But the opposite is true. Puts in XPX are mainly bought. So big funds, big banks, they buy puts as protection, is kind of insurance, no? Lots of insurance. So the puts are being bought by market participants, so option dealers are short the puts. So observe that. So you are long calls and short puts. So option dealers tend to be long in the aggregate no matter what. But there is a difference between being long calls and there is a difference between being short puts. When you are being long something, options, you are long gamma. So when you hedge, you are hedging against the move. So if I am long gamma, for instance, long calls, and the market goes up, to be neutral, I have to sell. So my hedging activity opposes the market activity. That's why, for instance, this region here is a region where the market doesn't move that much because it's a long gamma region. This region, any moves in the market, hedging activity will oppose them, so it tends to slow them down. And what is that level? There is a level, of course, where when the market comes back to that level, there is a level where the hedging activity switches from long gamma to short gamma, and that level is 2415. This is computed real time. So right now, as long as we are above 2415, hedging activity from market from option dealers on XPX is gonna be against the market. So any sudden jumps will tend to be smoothed out. The same thing with any sudden drops. However, when you are below this value, the market starts to switch short gamma. So option dealers, the puts that they are short start to dominate. And when you are short gamma, the hedging is completely different. Okay, I'm glad someone already got out at almost 100% on VXX. Congratulations. I mean, I will take 100% in one day anytime. You know, I will be more than happy to make 100% in 24 hours. So I am glad that some of you are already doing it. I just got a comment where they say that. Anyway, so I was saying about the hedging level. So if the market falls below 2415, option dealers will be short, and when you're short gamma, you hedge with the market. That means if the market falls, you have to sell, and if the market goes up, you have to buy. And now you can tell why it's so different. So that's what happens if there is a fall and the market falls massively below the short gamma level, then hedging activity from option dealers is going to accelerate the fall, because option dealers will need to keep selling. And that's terrible. So it is fuel for a fall. That's how it works. So that's why yesterday I was watching those levels, and we broke it briefly, and that's why so fast the drop from 2414 to almost 2400. It was really fast because there was hedging activity, but then we came back and things are good again. But anyway, so that's what I am seeing right now in terms of gamma imbalance. In terms of term structure, let's see what I see in terms of term structure. Term structure of, well, this point here is in a few minutes, so let's ignore it for a second. Term structure is incredible. No, volatility market is basically back to normal, like nothing happened yesterday. The world is perfect. There is world peace, cure for cancer. All those things already happen. And there is nothing. As you can see, there is absolutely nothing here. There are no bombs in any place. And also, you notice this is the area for next week. Amazingly, it's like, look at how low volatility for next week is. It's tremendously low. And the reason is it's only like 3.5 sessions. So that's the explanation why in terms of volatility, it's not that much. Let's just out of curiosity, let's compare it with the volatility from yesterday and see how does it look like. Because I want to see how much it dropped. The fact that the BXX short is making so much money, that means that it's dropping a lot. It's not that much. I mean, you can see, compared with yesterday, the red is yesterday. Compared with yesterday, we are dropping on the near term a lot, but the market is not reacting that much here on the far end. Let me see if I can. Let's remove those outlier dots and compare only. Yeah, so the market is kind of interesting. This is an interesting thing. The volatility for medium term, like 100 days and up, is not dropping that much, and this might tie with the concept of a very volatile end of the year. It's not dropping as much as I thought it was dropping. Here in the near term, the next month is dropping a lot, so it's normal. This is what happens when the market normalizes. But yeah, I'm curious that volatility hasn't dropped that much on the far end. We'll have to keep an eye on that. Okay, so I think that's what I have for today. As usual, if you have any questions, just please don't hesitate to ask them. Type them on the little window, and I'll try to answer them as much as I can. Let's see what the market is doing, so I can make decisions here. Yeah, the market is gonna be it's going to close around this area, probably between. My bet was that it was going to close at 2,425. It's 5 points above, but it can always drop 5 points before the close. BXX is returning lots of money, guys. So you can liquidate half of it. It's up to you guys. I am going to keep mine because I got a lousy entry. However, if the profit for this trade is around if the VXX position goes to 62, 65, I'll close it. So that's how I'll roll, so you know. Anyway, if there are no more questions, that will be all for today. Also, if there are some questions that you want to ask in the room, please go ahead, type them on the room, send me messages. Thank you very much, folks. Enjoy your weekend. I hope you have a great 4th of July holiday, and you enjoy whatever it is that you're going this weekend. Take care.